Finart is a financial product distributions platform mainly focused in the rural areas and the semi-urban areas for this country. We wanted to build this financial product distribution platform mainly focusing towards insurance and savings products. In our whole assessment of these two products, which is insurance and savings, which is protection and savings, we have realized specific to rural, there are 4 key challenges which are there. First is poor customization of products. As we have seen a lot of times, even on the retailization of insurance, the products are built for urban areas and sold in rural, and therefore the customization is not there. Second is after-sales support. In the sense, once product is sold, the claims part of it is left without unanswered. In a lot of times, that is the challenge that we see in rural areas and semi-urban areas. Third is lack of trusted one-stop service provider, which can offer all these products as a bouquet to the client. And fourth and a very important thing is, given that rural areas have very low cost product requirements, the requirement for a frugal distribution network to reach out to these areas. So at Finart, what we are looking forward to do is, we are creating a assisted digital platform which can provide access to the curated financial products. What I meant by curated is, on our platform, we will be keeping mainly products which are built for the rural and semi-urban spaces, whether it's protection or saving side of it. And therefore, these products is designed along with the product partners and brought on our platform. Second is, we are focused towards bringing this, servicing these products throughout the product life cycle. So once the selling is done, it's mainly on the claims part or the redemption part. We have built an end-to-end digital journey where we can support our partners in the claims processing or the redemption of any investments. As we said that we are mainly focused towards rural and semi-urban areas, and therefore the whole platform is designed keeping that into view. Now, how do we execute? So at one end, we have our institutional partners who are mainly the product providers, whether in both the protection and savings side. But on the other side, we have 2 different distribution networks that we are looking forward to create. One is there is already a strong rural distribution network by the existing institutions. We look forward to partner with them and participate in the distribution of these products. And the second is we are creating our own distribution platform for specifically on the savings side for the rural areas. So these are the 2 areas where we are focusing to build that network. What do we offer? As I said earlier, we will like to offer the curated products which is meant for the rural space, which is meant for the people and taking care of the specific requirements for them. As I said, our model. So on top, if you look at, there are 3 key pillars for us to deliver the Finart platform. One is our institutional partners. Second is our product partners or the creators, mainly the insurance companies or mutual funds or other kind of entities who are the product providers. And the third is the Finart local presence, which is the branches which we'll have at the district level to service those partners. In terms of our platform, we have created 2 different platforms. One is, for the institutional partners, we have digitized the end-to-end journey, whether the product is on a group platform or a retail product that we are selling. End-to-end journey is digitized for institutional partners, which can support them in selling those products. Apart from that, we are creating our individual sub-partners in those areas. In insurance, it's called point of sale. For investments, it's called sub-agents. And these are the individuals who will be helping us in doing the last mile delivery. That's the idea of Finart. As we were here, thanks Sa-Dhan for providing us this opportunity to present the concept of Finart in front of all of you. Yeah, thank you.
Thank you. We'll now be launching the Luminate Exchange and MFI, a fraud risk management exchange. I'll call upon once again on stage Mr. Gigi Mammon and Mr. Nanaiah Kalengada, MD of Equifax Credit Information Services Private Limited. Please welcome them, ladies and gentlemen.
Thank you. Good afternoon. Very delighted to be here and also using this occasion to launch the Luminate Exchange that is built in partnership with Sa-Dhan, especially to address the potential fraud risks in this space, more on microfinance space. Luminate, from an Equifax standpoint, is a broader exchange to manage fraud risk. We obviously started our journey on providing solutions on fraud risk for fintech segment, which has gone live early this year. And we will go live with the microfinance anytime now, and exchange is already ready. The difference between the existing solutions and the solution that we are rolling out is very clearly very use case specific. We don't have one solution which fits for all. I think the risks and segments are very, very different. So we're trying to address the differentiated risks in each segment through the Luminate Exchange. So the underlying data would be a common data platform, but what we'll run on top of that is user applications for identifying potential fraud risk. From a credit bureau standpoint, we work with industry to help reduce credit risk. And now what we're trying to do is to help industry protect themselves from fraud risk. In this business, I think these are the two big risks that one has to protect themselves. And so we are playing an enabling role. And from an Equifax standpoint, I'm very delighted to be part of the industry. I'm very delighted to have had an opportunity to work with Sa-Dhan to initiate this entire program. We had a committee which met, I think, quite often to decide as to how the framework should look like. So we're very delighted to launch this and looking forward to building on it. Obviously, innovation is key in any of these platforms. So we will continue to innovate locally and also bring in some of our global best practices into the space. Fraud and ID is a much bigger practice that's evolving around. So very delighted to be partnering with Sa-Dhan in this. And I wish all the very best and congratulations.
Good afternoon to all of you. As you know that we have partnered with Equifax to start this fraud risk exchange. I would only request all my MFI member friends to please try to understand this fraud risk exchange a little more better and try to onboard on that. In this connection, let me tell you around 10 members are already part of the steering committee. And they had been discussing about this platform for some time. So I'm sure they are quite well aware about how this platform is going to work and what kind of benefit this is going to give up. So please try to onboard. As soon as you onboard, then only the exchange can become really operational. So my request to all of you is that please try to onboard and start giving the data so that it can work as early as possible. Thank you so much and all the best to Equifax.
Well, thank you, gentlemen. And with that, we now proceed to our next plenary session 4 on Spotlight, East and Northeast India, Emerging Opportunities and Challenges. And to moderate the session, we once again have with us today at Sa-Dhan, Mr. Tamal Bandyopadhya, Consulting Editor at Business Standard. Let's all welcome him with a round of applause as I invite him to join us on the stage. And as an esteemed set of panelists, we have Mr. R.K. Takkar, former MD and CEO of UCO Bank, Mr. Nanaiah Kalengada, once again, MD Equifax Credit Information Services Private Limited, Ms. Rupali, Kalita, MD and CEO Northeast Small Finance Bank, Mr. Manoj Kumar Nambiar, MD of Arohan Financial Services Limited, Mr. Venkatesh N, MD of IIFL Samasta Finance Limited, and Mr. Sa-Dhan, Chief Economist and Head of Research at Bandhan Bank Limited. And just before, in fact, we start this panel discussion, we have a lead presentation by Prime M2I Consulting Private Limited. So I'll request the representative to make the presentation. Thereafter, we can start with the panel discussion. Who's there from Prime M2I? Prime M2I is the Who is there? Rahul Bisht? Okay. Mr. Rahul Bisht will be making the presentation. Let's welcome him.
Good afternoon, all of you. and a very special greetings to our panelists here. So this presentation is a very short presentation just to set the context for this session. It's a data-driven presentation to highlight some of the developmental issues that East and Northeast part of India faces, to highlight some of the skewness on a regional basis that exists there, which I think will set the context for our delegates to discuss here. So the first thing is East and Northeast definitely is an important part. It represents together almost 25% of India's population, with a total population size of close to 351 million. But that is not the reason why it is important, but it is important more so for the development skewness that I'm going to highlight in the coming slides. So if you see on the per capita NSDP, which is net state domestic product, out of the bottommost 14 states, 9 states happen to be from East and Northeast India. Even in the aspirational districts, out of 117 aspirational districts, roughly 17, almost 65%, which is 70 districts are from East and Northeast India. Recently, Niti Aayog has come with this multidimensional poverty index, which is a very scientifically designed index to measure poverty on multi-dimensions, not just from the economic point of view. And if you see again, the red, orange, and the yellow parts, you will find mostly located in the eastern and the northeastern parts of India. This is the state-wise data. And if we look at the district-wise data also, you will find again that color hue that you can see. The red, yellows, mostly are on the eastern side. Even on the head count ratio, which is the percentage of population which is below poverty line, but not in the traditional below poverty line, but on the multidimensional poverty line, again, you will see that out of 11 states which are in the yellow, orange, and red category, 7 happen to be from East and Northeast. You can see as higher, Bihar is as high as 52% of the population in head count ratio are below this multidimensional poverty index. Even Jharkhand, 42%. Uttar Pradesh, but Uttar Pradesh is not part of the East and Northeast, but a lot of Eastern Uttar Pradesh, if you want, you can consider as East India. And then rest are mostly East and Northeastern states, again, on this. Talking about banking penetration, while this is the, as we have now more bank accounts than the population, for overall India, if you see the average is 1.3 bank accounts. But again, if you see all the East and Northeastern states, they're all below the national average, with Nagaland as low as 0.6 bank accounts. Credit deposit ratio, which kind of reflects the economic vibrancy, that how much is the credit offtake. Again, if you'll see, overall India, the credit deposit ratio is around 71, 72%. Southern India, as you can see, north. And when you come to Northeast and East India, they are way below the national average. Almost like 46%, 43% is the credit deposit ratio. So these were some of the key issues that I think that exist, and that is why probably Sa-Dhan prioritized East and Northeast in this conference. However, on the positive side, if you see, there's a very good penetration of microfinance in East and Northeast. It is home, as we know, to some of the largest microfinance organizations. We all know Bandhan Bank, Annapurna, Arohan. So these are the institutions which are some of the largest institutions in the country. We have a small finance bank, Northeast Small Finance Bank, located in Guwahati. There are 107 MFIs and SFBs operating in this region. Total loan outstanding is in excess of 45,000 crore. We have almost 1.6 crore clients in this region with a branch network of 7,600 branches, and 10 out of the 25 top districts in India in terms of loan outstanding are in East and Northeast. So while on one hand we have these economic indicators where the East and Northeast seems to be lagging, we have a lot of strength in terms of the ability to address some of the issues, and therefore I think some of the issues that are there that this panel can discuss on are what are the key challenges and opportunities that exist for microfinance organizations in this region, how have we fared so far in addressing some of these issues, and what could be done more, because clearly there's a lot to be done, and therefore I think these are some of the key issues that MFIs within their mandates, within whatever the capacity they are in, can, I think, have a role to play, and this is something that I think panel can discuss on. Thank you very much. Yeah.
Shall we? Very good afternoon and welcome back to the post-lunch session. The challenge is always there, so don't feel sleepy. We'll try to make it exciting. First is, I think we must congratulate Sa-Dhan, Gigi, for crafting a very wonderful panel. If you look at the panel, it's very interesting. On my immediate left is past chairman of UCO Bank. It's one of the, rather the only public sector bank which is now in eastern part of this country. Rest, the two of other have been merged with others. And on the extreme left there, Nanaiah, who is the data bank among us, the credit bureau boss. And in between, if you see, there is one Madam Rupali. She is based in Northeast. She runs a small finance bank. Then Bandhan is being represented by his chief economist. Bandhan has very large microfinance exposure and large presence in East and Northeast. And then we have two MFI NBFCs. One is Eastern region, Manoj, and Venkatesh, again, very big IIFL Samasta, but he's not, if I'm not mistaken, you are not in the Eastern Northeast in that sense, correct? Yeah, but not in a big way. So I will get a 360-degree view of what's happening, what are the possibilities, what are the opportunities and all. And it's an excellent presentation where primarily talking about the opportunities, the demography and how underbanked they are and all. But with due respect to the panelists and the thing, I was going through the numbers, which are the SRO's number, the two SROs. The numbers, if don't say that I am from media and I'm cynical, but if I look at the numbers, my gut feel says, or the first impression is there are more challenges than opportunities in East and Northeast. Now, why I'm saying this, just look at this between, one of the SROs talks about the numbers between June 2019 and June 2022. I'm talking about the MFI, right? MFI, the activity, not the bank and MFI exposure. It's a combination of that. The microfinance per se, in percentage term, it has gone down from the overall percentage from 41% to 37%. But the average loan size in East and Northeast continues to be high than the average loan size in India. It was 23,200 versus all India 20,500 in June 2029. In June 2022, it is 26,200 plus versus 24,900. So it is bigger than the thing, bigger than the average this thing. Number of beneficiaries was borrowers was, roughly in terms of borrower, it was 38% of the borrowers in June 2009. It has gone up to 43.66%. Now we can always say that, look, this is opportunities because more loans are given, more people are taking loan, etc., etc. But the catch is somewhere else. You look at the default thing. In PAR 30, technically you know what is PAR 30, 30 days people have not been able to pay off, which was 1.63 in June 2019, gone up to 18.35. every 100 rupee lent, par 30, 18 rupee 35% not paid. It was actually even higher in June 2029, 22.40. What's the all India average? The all India average is very different. It was 1.95, higher than Eastern Northeast in 2019, but it's much lower than now. It's 13.79. So that's it. And if you look at some of the other numbers, again, one of the SRO's number, I'm not talking about which SRO. Two eastern states, which is Bihar and West Bengal, and now I am told Orissa is included, always remains among the top 4 or 5 states. You think. 3 districts of West Bengal always remains among the top 10. If I say always, for the past few years, always remains at the top 10 districts, which is the maximum exposure. Murshidabad always leads. Murshidabad, Jalpaiguri, and North 24 Parganas. So 3 districts in West Bengal, the highest exposure. And quickly, some other numbers, and after that I will not talk, only this gentleman and the lady will talk. Is this, what are the numbers? Says the portfolio quality in Assam has improved from repayment stress. PAR 30D has improved to 15.29 from 16.84 in December. I'm talking about June, 15.29. And PAR 180 deteriorated to 34.64 from 33.40. So PAR 180 days has gone up to close to 35% in Assam. Assam is one of the eastern, northeastern states. So, yeah, these are there are many other numbers and all. So clearly, I mean, I don't know whether it's a political interference, is it flood, is it earthquake, or MFIs need to look at them. When I say MFIs, I mean the MFI lenders, irrespective of their profile, because Reserve Bank of India has gone, migrated from entity-based regulation to activity-based regulation. So it's a level playing field now, whether you are a bank, or whether you're a universal bank, or SFB, or NBFC MFI, rules are the same for everybody. So all this, if I may call it MESS, a 4-letter word in finance, whose creation is this? Politics, earthquake, natural calamity, or the industry itself is responsible. So there are huge opportunities, obviously, because the demography says that, the under-penetration says that, but at the same time, there are challenges. So on a scale between opportunities and challenges, I think best, I would not like to impose my views on them. We'll hear the people who are actually handling this. For them, is challenges far less than the opportunities? And if indeed there are then it's fine. And if indeed there are challenges, how do we actually come over and overcome those challenges and move ahead? So I have no gender bias, but let's start with Madam, because she is there at the epicenter, East and Northeast. Ms. Kalita, she runs SFB, Northeastern Small Finance Bank. So over to you, ma'am. First round, all of you talk preliminary remarks for about few minutes, and then we'll get into some micro entities. It's 3:20 now. We'll end sharp at 4:15, not even 1 second more than that. We'll take a 1 or 2 questions in between, if time permits. Nanaiah has to catch a flight. He will leave at 4 sharp. Okay? That's all.
Okay, thank you. Thank you, sir, for giving me the first opportunity.
Just good.
With all due respect to whatever when you have set the context, I'd like to draw attention to the fact that in East and Northeast, actually West Bengal and Orissa has grown, but at the same time, Northeast portfolio has come down. From 12,500 crore of portfolio in Assam, it has come down to 7,500 as of 2019 against 2022. So the growth story is not there for at least for the Assam and the other northeastern states, except West Bengal and Orissa, of course, it has grown. And NPA percentages, of course, sir, you were right, whatever you have quoted. The reason is well known, that there were political interference, there were flood, all put together. But with again, the understanding of the government, it has started coming back to normalcy, I can't say, but at least it has started sort of working back to normalcy gradually. So we have started getting the recovery, and the OTR in the worst districts where it was earlier 16-17%, on-time recovery has started going up from 45 to 65% sort of a range, which is very positive as of now. But though Tamal sir has felt that it is actually challenges are more than the opportunities, but let me tell you that there is ample opportunities because it is because of the proximity towards Southeast Asia. There is one that is sort of one plus point where we can build it up as a commercial and connectivity hub towards Southeast Asia. Then we share the same semi-tropical climate as Southeast Asia, so it can. We already have started in the Northeast for sort of as a cultivation hub for the exotic fruits like kiwi, like dragon fruit, like passion fruit, all those things, like those can be commercially taken up there. So that is another potential. And pineapple, orange, and lemon, it grows plenty there, which is another potential there. We have a variety of rice like Vietnam. It's sticky rice, it's aromatic rice, it's black rice. So all those things can be. Those are also potentials for sort of business growth. Then again, being a naturally beautiful terrain, it can be sort of built, developed as a tourist hub with affordable homestays for both adventure tourism as well as religious tourism. Then handloom, handicraft being the strength of Northeast, and the production as well as marketing of handloom products outside and handicraft products outside Northeast, as well as in the international market, can also be a sustainable livelihood opportunity for the Northeastern people. Of course, challenges are there. Deteriorating credit environment was a challenge for all of us. Then, of course, government intervention was another challenge. Road, rail, net connectivity, those are also challenges there, especially in the tribal areas, in the tribal states. Then building of the capacity of the youth is a challenge. Developing awareness amongst the entrepreneurs or the farmers is a challenge. So challenges are there, but at the same time, we feel that opportunities are plenty, and we should discuss the opportunities that is available there. Thank you, sir.
Thank you, Rupali madam. So I'll be very happy to be proved wrong. So you heard there are a lot of opportunities, both in terms of agriculture and handicraft, and there are challenges. So let's hear somebody who doesn't have much presence in Eastern Northeast from somebody who is present there, entire activities concentrated there, and to someone that's Venkatesh. Over to you.
Good afternoon. I mean, in terms of, we are a south-based microfinance company, but we do have presence in states like Bihar, West Bengal, northeastern states like Assam and Tripura. If you look at the, I mean, we have to look at it from our view, based out of south and how we have set up operations. We still feel there is a huge amount of opportunity given the number of households per se, the density of the population, and in terms of even, I mean, one of the key elements in the microfinance is to onboard people to actually work. We find this still conducive for us to work, especially the states of Bihar, West Bengal, and to an extent Orissa also. We still find this conducive in terms of the work. We are looking, I mean, the infrastructure development has happened. I mean, we have been there in these states for the last 5 years now. As the infrastructure development has improved in these states over the last few years, we see a lot of economic growth activity which has propelled, and I think the lending aspect. The important, I think, is how do we actually look at the household with the new regulations which have been in place, has given an opportunity for, I mean, like Mr. Tamal had mentioned about looking at the household income and then looking at lending. That's also been a key factor, how we actually looking at the over-lending aspect of it can be taken care of. So we, from our side, we see a good opportunity in East. I mean, definitely in Northeast, with the Assam situation getting to some kind of a conclusive thing, we do see some opportunity in Assam. But other certain pockets of certain states in Northeast, other states are a bit of a challenge. But overall, we see it as an opportunity in these places.
Thanks, Venkatesh. So we heard one SFB, Small Finance Bank, and we heard one Microfinance MFI. Let's hear a banker, which is the gentleman sitting next to me. I mean, he, as I said, he was the boss of UCO Bank, the only bank, PSU bank based in Eastern India, entire Eastern Northeast. There is, of course, a private bank, which is Bandhan, representing there. We'll come to Bandhan later. Over to you, sir.
Thank you.
You know the region very well, so tell us.
Sure, thank you. I think initially we have been shown the figures, and Mr. Tamal has also elaborated on the data what we have. I think the data by and large speaks for itself. But sometimes there is something more also beyond the data also. So from that angle, I would say yes, there are a lot of challenges. We have been facing, especially in the Northeast, I would say specifically, to some extent, yes, in eastern part also, but it's more prominent in the northeastern region. Previously, we had a lot of connectivity problems, I think, which have been resolved now. So from that angle, now how we are using digital means, that was one of the biggest challenges in the Northeast. And to some extent, even eastern part, especially Bihar. I remember we have meetings with the ministry, like that was one of the areas where the connectivity issues used to be there. Even sometimes our bank branches couldn't function, leave aside the BCs or other models. So those have been resolved to a great extent, and I think we should give credit to whether it was financial inclusion through opening of Jan Dhan accounts, then we had this Aadhaar, which facilitated so many things, and then the UPI payments. These things have mitigated the challenges to a great extent. But still, I think we have the issues, especially if you go to Northeast, leaving aside, I think, Assam, all other states, I think we have not been able to penetrate, really. The penetration level has been to, I think, I would say a very nominal level. There are issues geographically, accessibility. Now we have been able to overcome through the BC model, which was there. Now interoperability has been there, so anybody can use those facilities for remittance funds, whether opening accounts. But whether we are able to reach the real people who are not into the banking system or not into the financial system. I think that's a thing which, as a banker, we also had the issues. The MFIs have been able to fill that gap which was there, which the banks were not able to fill. Perhaps they have better means. They are not bound by so many rules which the banks have to follow. So from that angle, MFIs have been able to enter that field, but I think still a lot has to be done. On the other hand, if I come to the eastern side, which is basically Odisha, West Bengal, and Bihar. In West Bengal, because UCO Bank is based in Bengal, we also had two RRBs out there. One in Bihar and one in West Bengal. We did a lot of, I think, work in the matter of setting up of SHGs and JLGs. And we were quite successful in that regard. But that delinquencies are there. I think that's a cause of concern whether it's a eastern region or a northeastern region. And unless any institution, whether it's a bank or a MFI, unless that recovery processes are strong, we are able to recover our money. I think the lending, we may or may not agree, but the lending suffers. So that issue, especially with this Assam, what we had in the recent past, although that has been resolved to some extent, but still the message it conveys, the other states people, they also look forward to similar type of concessions or reliefs. So that, what I would say, ki the people who have been paying their installments regularly, they also become defaulters. I think that is ably reflected in the PAR figures what Mr. Tamal has been giving in his presentation. So that I think we have is a challenge which we have to face, because now other issues like accessibility from the angle that connectivity issues were there, or we were not able to assess those means, they have been resolved to a great extent. So I'm sure with the given infrastructure, we can penetrate these markets, because these both eastern and northeastern region are ones where SHGs, JLGs have been successful, but yet a lot has to be done. So I'm sure after this Sa-Dhan, what they have been doing, we will be able to get some inputs by which these things can be met.
Thanks, Mr. Takkar. So all the data, what I read out is not my data, not my presentation. It's actually the SROs of the industry. Similarly, one data again from that SRO only. That, I mean, hold your breath. Nagaland has the PAR, the exposure on an individual, the highest in Nagaland, all India basis, 60,630 per individual borrower exposure. Nagaland always tops the list. Dadra and Nagar Haveli come second with almost 10,000 rupee less, 54,000 something, and others are all. But Nagaland is actually 63,000 is the highest among. So it's not that, yes, accessibility is an issue, but there is other factors also, as you can see that. So let's hear Arohan, because you are based in Kolkata and you have substantial exposure in East and Northeast. So we have heard a small finance bank, a banker who was heading a Kolkata-based bank, and we heard one NBFC which have very small exposure in the Northeast. But now Arohan, which have substantial exposure in East and Northeast. So let's hear Manoj.
No, thank you, Tamal. I have a slightly contra view to what is generally being discussed. I don't think you can ignore a portion of India which has 26% of the population, contributes as of 2019 figures close to 18% of the GDP, 13 states where 27% of migrants in India come from those 13 states. 60% of the population is between 15 to 59 years, which is really the productive age. A gender balance of about 49%, which is a very healthy balance as compared to some other states in the country. 70% of economic activity is agri-based, and you have a fair mix in terms of male and female participation in the workforce. Now, having said all this, I think what is really an entrepreneur? On one hand, I think Tamalda has read out a whole list of challenges in the Northeast space. And on the other hand, people like us see opportunity. Now, obviously, there are challenges that you need to cross through before you can reach that potential opportunity which is there. But if you look at the past, if you look at even the microfinance industry, which a lot of people have been speaking about Assam, tell me one other state in the country which actually passed a MFI bill. And we from the sector were able to interact with the government, explain to them the background, and the bill has been stayed. Over and above that, we managed to get, after talking to the finance minister and the chief minister, India's first microfinance incentive and relief program. totaling to an outlay of 7,200 crores. A lot of people, even when we signed the MOU, said nothing is going to happen. Cat 1 we finished way back in March 2022. We finished category 2, which is OD customers getting their ODs paid to the lender and incentives being given to the customers last month. And now we are on the verge of starting Cat 3, for which the data is being submitted. Right? I do not think any other state in the country in the history of independent India has ever given a single paise subsidy or relief to any operating MFI. This is the first state in the country. The chief minister of that state issues half-page, quarter-page advertisements to basically say, inform the citizens to say it is important to pay your MFI loans. This is a one-time activity that we are doing from the government because of whatever happened in COVID, floods, etc. This is not going to come back again, and we have to regain the earlier status of what Assam was. Not many people sitting here would know that in 2019 September, 1 month before the problem started in Assam, it was the third best state in the country on MFI portfolio quality. And we should know because we've been in Assam since 2008. Right? A lot of the entrants in Assam have actually come in after the demonetization, where people wanted to balance their portfolio. Now 0.32% par 30 as of September 2019. Of course, today it is high. Par 1 is high, par 30 is high, par 60 is high, par 90 is high. But the fact is that when there is an intervention politically, when there is an activism, and when there is an announcement of such a relief scheme, there will be people who will wait until the entire payment comes out. I have no doubt in my mind that give it 1 more year after the scheme is finished by hopefully March or maybe June next year, Assam will get back to its position as one of the top 3 or top 5 best states in the country. Because typically what happens is that in any state where there is oversaturation, some kind of a situation like this happens. If properly handled, I think it can go back to being one of the best states in the country. Right? So I do not think it is about challenges. Challenges will be there. You have to understand the local culture. You have to understand the local trade. You have to understand the do's and don'ts. I think a lot of the RBI regulation that you're seeing today, which I think was discussed in the panel prior to this one before lunch, the regulation on the harmonization on credit guidelines, the deregulation on pricing, all of them have their background in what happened in Assam. Essentially what happened, that only one category of MFIs, which is NBFC MFIs, were subject to all those terms and conditions. And the SFBs, the universal banks, and the NBFCs were not subject to those conditions. Now, 12,500 crores, of which one big lender itself was 7,500 crores, and because the norms were not uniform, obviously there was issue. So I think it's time that we also introspect as an industry to say, what are we to do before any such situation happens, rather than blaming the situation outside. So I will end my first submission by saying that the opportunity that Northeast offers, especially with the ruling dispensation now aligned with the central government, the kind of focus which is there on developmental projects, investments, is huge. Now, if you're going to be out of that, fine, that's your decision. But people like us who've been there since 2008, understand the local nuances, are willing to go through these difficult times and last until the good times come back. And hopefully when the good times come back, we will be better disciplined, given the new RBI guidelines and the fact that the higher margin today allows you to go into locations. So Northeast has one peculiarity, that the population density is fairly scarce. So you obviously have to cover a much larger distance before you can maybe create a group or a center. Now that in a 10% margin regime for us was actually difficult. With the margins available, you can price for risk. If you think a particular state gives you higher delinquency, you can price for that. But access to credit is essentially the opportunity. If you look at the CRISIL Inclusex Index, which is a very telling commentary on Northeast vis-a-vis the rest of the country, you will find that Northeast gets hardly 40 marks out of 100 on a lot of parameters. Credit to deposit ratio, branches, insurance penetration, credit availability, and all of that. Whereas the all India average is close to about 65, 70. Now that is the opportunity in Northeast and the East. Right? So I think rather than look at the challenges and run away, all of us should book our tickets to go to, to fly to Guwahati and look at what are the potential opportunities.
Thanks, Manoj. Brilliant. Huge homework and brilliant presentation. And you are a great brand ambassador for East and Northeast, particularly Northeast. Great. Only thing, there's a little contradiction. Whatever you said, you were talking about politics, etc., state government. Then you just thrown one line, oversaturation, and then you said that Reserve Bank of India had to come out of the line because of the excesses. So there is a little bit of contradiction in the sense you are actually talking about externalities. Then at the end you are blaming the industry itself. So we hope that industry learns itself, from the lessons, and because what happened in South Andhra Pradesh, that became the first 2011 Malagam Committee recommendations and the first rules and regulations for MFIs. And then another state with capital A, after Andhra Pradesh, Assam need to step in to tell Reserve Bank of India to come out with the new rules and regulations. So hope that something else doesn't happen in one of the other states, and then we'll yet another new set of regulations coming. We are left with two, data man Nanaiah and Bandhan Chief Economist, Dr. Sanyal. So let me keep Sanyal till the end, because you are the king, you meaning the Bandhan is the king of that, that particular area. We'll hear you at the end. Before that, Nanaiah Sahab, your data. What does it say? What are the, enough challenges, let's talk about the opportunities or whatever you wish.
Thanks, Tamal. So I'll add a few more to the data that I think we've heard so far. So the East, if you look at Eastern India, contributes about 35% of the overall portfolio in the country at this point in time. So, but it's the largest in terms of the region. East is number one, followed by South, and then you have West and North coming in. So very large portfolio in East, and so we were looking at a couple of trends within Eastern India. So we looked at in relation to GDP as well. I would have loved to look at the industry trends in relation to the growth of roads and connectivity, but the data is not that freely available in terms of relating both of these things. But we looked at the GDP growth. So we picked two states, right? And if you look at West Bengal, the GDP has grown. Obviously we are looking at GDP growth over 18-19 to 2021-22. The GDP has grown, but if you see the portfolio has actually gone down. GDP has grown by about 16%, portfolio is down by about 12%. Contrarily, if you look at Bihar, the GDP has grown and the portfolio has also grown significantly. The growth in Bihar portfolio is about 35%. So it's very linearly aligned to the GDP growth, and I think West Bengal, kind of presents a trend which is a little bit other way around. So I think possibly there's the need to look at more at the borrower level to see as to what the trends are seen from a West Bengal standpoint. But broadly, Tamalda, from an opportunity, I still strongly feel opportunity is significant for the industry across the country. And even in Eastern India, if you look at the penetration, though the reference point for us is the census date of 2011, the penetration is all sub 10%. So even if that 10% were to become 15%, industry can grow multifold in the next couple of years. So opportunities plenty. I think it needs to be looked at from a state standpoint. It needs to be looked at from a borrower standpoint. I think the code for responsible lending, all of these are factors. And the new regulation from RBI, I think, brings all of this together extremely well, to making sure that, one assesses the household income, the indebtedness, and decide on the FOIR. So I think opportunity is plenty. I think we need to look at some of the specific data to see where the trends are.
Well, Nanaiah, thanks. And now over to you. Siddharth.
Thank you, Tamal.
After this, we'll take one or two questions from the audience. So can the microphone be there? Just quickly. We'll not wait till the end. Okay? So just the microphone be there in the audience. One or two questions, quick questions we'll take. Very brief. No observation, just a question. And who are you asking? Yeah, over to you.
Yeah.
Sorry. Dr. Sanyal, over to you.
Tamal, I'll conveniently wear two hats during the next 2-3 minutes.
As many hats as you want, please.
One is that of Bandhan Bank Chief Economist, and other is possibly economist in general. Bandhan Bank, from economics and more so from our strategy point of view, that also is kind of something I get involved with. So over a period of time, our intention is to go beyond East and Northeast, where we already have a very, very strong foothold. So it's not that we'll be reducing our portfolio there. We'll keep on expanding our portfolio in those two areas, but at the same time, we'll possibly be expanding our portfolios and various other businesses, not necessarily only microfinance, in other states and other regions are much faster. So that's the broader strategy that, I mean, we are very clear that we are a pan-India universal bank, and so we have a target for 2025 where our financials will look more like some of the other banks than any overt focus on any particular region. But having said that, so we had embarked on that particular journey a few years back. But having said that, even when internally, when we look back, go back and see what are the opportunities, threats, challenges in these two areas, East and Northeast, and again, there is a bit of oversimplification. East and Northeast possibly are very different by nature on certain parameters. It's always, we find it very, very difficult at the same time, despite what I said just now, we always find it very difficult to ignore the appeal and the attraction of those two areas. Not necessarily only from a microfinance point of view, but from our other businesses point of view also. More from a general economist point of view, what I wanted to say, if some of you would recall, about 10 years back, in case of India, a very significant point of discussion used to be India's per capita GDP crossing the $1,000 mark and something like that. Typically, historically, it has been seen across the globe, decade after decade, a very significant inflection point on a number of factors. I think we had experienced that a few years back. India's overall GDP now is slightly higher than that, approaching more towards $2,000 mark. But the area which we are talking about is actually just experiencing that particular zone. And now, interestingly, I mean, from a strategic point of view, what we hate to ignore, that some of the other things are also falling in place in a very significant way. Generally, that particular momentum was happening. Money in the hand of people had been improving. At the same time, there has been a very clear thrust. We have discussed all these things in bits and pieces. Very clear thrust on infrastructure and some of the rural infrastructure. Now, if primary products are a very significant source of income for this particular area, I think when you get better rural infrastructure in terms of agro-marketing, agro-storage, I'd possibly put in the highest possible priority in this particular order, especially when we have made significant progress in terms of rural electrification. It has made the situation much easier across the country and also in this particular area, and possibly Eastern and Northeastern, along with a few areas like possibly UP and all, will possibly be benefiting very significantly over the course of the next few years from these activities. With better infrastructure in general, better road connectivity in general, some of the problems of insurgency, militancy, what we used to discuss maybe 10 years back, my sense is that the picture can actually be very significantly different towards better in another few years' time if it hasn't happened already. So I would try to sum it up this way, that there is truth in both the extreme points that we discussed. No doubt there has been a significant set of challenges what we are seeing now in terms of some of the data points, and in the near term those challenges cannot really be overlooked and ignored, and it will be foolish to ignore, because you have to keep your seatbelt fastened in all possible areas and also in this particular area. But at the same time, in terms of some of the opportunities and some of the delta, I'm not saying that this particular area will become very quickly like the western and the southern part of the country, but in terms of delta in a finite number of years, comparable number of years, this particular area might actually be surprising if I take a 5 to 10 year kind of a horizon, is my guess.
Thanks, Siddharth. So you have heard the economist and also the Bandhan spokesperson. Thank you. We'll take a couple of questions at least, if anybody has. Anything on East and Northeast? No? Nobody wants to have any question? Yeah, this lady. Yes, introduce yourself and make a very brief question only, yeah? No commentary.
Good evening, everybody. I am Astha Gupta from Share India FinCap Private Limited. My question is for Mr. Nanaiah. Sir, a lot of times we pull out the reports from, every time we pull out reports from Equifax, a lot of times the reports are based on wrong IDs provided by the clients. So what happens that the report comes out fresher of an over-indebted client. So are we doing something to mitigate this? Because it's all a vicious circle. An over-indebted client gets financed, and then the client does not pay, DPD comes in, and then the finance comes out of the state.
Thank you. Yeah, carry on.
Thank you. So we certainly understand the issue. Our approach has always been, this is two ways, right? So we aggregate the data, bring the data together to present a comprehensive view of the borrower. So the quality of data at the submission stage is also very, very important. How do we consistently improve our search match criteria to ensure that we don't have a false positives or we don't have a false negatives is a consistent effort. I think as an organization, we have improved phenomenally on this in terms of bringing the data together and presenting a report which does not have false positives and false negatives. There could be still few issues in terms of IDs mismatch, but this is a consistent journey that we are at to ensure that we bring down the false positives and false negatives in the reports that we present. It's a consistent effort. The work is on.
Thanks, Nanaiah. Anybody else? Any question? Yeah, please, sir.
In fact, Mr. Nanaiah has already told about how East and Northeast is having a larger share than any other parts of the states, parts of the country. But there is also another thing to that, which Tamal mentioned about that. Out of the first four, two are from the eastern region. That is, one is West Bengal, one is Bihar. And for your information, Bihar is having the highest lending done during last year. It was around 13,900 crores. Although Karnataka stands first, but Karnataka, the portfolio is mainly because of the SKDRDP, which is a BC, 100% BC. If you deduct that part of it, Bihar is the number one. And West Bengal is also closely to that. I'm asking Mr. Manoj and Sanyalji, are we reaching a kind of a flashpoint in this region?
Thank you, sir. And incidentally, Orissa also, I think, has got into the league now. Latest one is this, one of the top. Yeah.
No, so Gigi, I think it comes from 2-3 aspects. One is sectorally, both the SROs, including Sa-Dhan, I'm sure, published data to the members about the potential, the supply, right? Highlighting areas which are red, amber, green. Red is a no-go. Amber, go carefully. Green, please go because there is opportunity and there are no, in terms of supply. Second, from the entity basis also, if you have proper risk management parameters, you will have an exposure limit per state or a political sort of geography that you look at. For example, you would be surprised to know that our board has clamped down very heavily on us for the Bihar exposure that we've had. And in the last 1 quarter, we've actually suspended disbursements except to existing regular clients. We do not want any state to have more than 20% of the total portfolio. Now, it's really a question of one, from a sectoral perspective, how much you heed the messages or the red flags that SROs like you, come up with. Second is internally. At the end of the day, it's your net worth multiplied by the leverage that you're actually putting there out in the market. So if, God forbid, anything were to happen, whether it is political or natural calamity or whatever, can you bear that brunt on your net worth and still be upstanding?
Thanks, Manoj. Sir? No? Siddharth doesn't want to take the question. Siddharth doesn't want to take the question, but I think he answered G. Saab, I think, in his talk on behalf of Bandhan. He said, we'll split into, you wear 2 hats. I asked him as many as he wants. He said, Bandhan, as far as Bandhan is concerned, it will cut down its exposure to East and Northeast and get into other areas, etc. Am I correct? That's what, did you say that? Partly. Okay.
We are not cutting it down by any stretch of imagination in terms of portfolio.
Okay.
our growth in some of the other places, in some of the other businesses will be at a much rapid pace.
Okay.
So we'll still be expanding the portfolio,
Okay.
but in terms of share, it might be smaller.
Okay. So I could force him to answer. Okay. Little distortion, so he could get up. So that's my job. Any other question? Otherwise, we'll go to Nanaiah because he has to leave. Any other question? No? So, okay, we are 3:56, 4:15 we'll close. Nanaiah, because he had to leave at 4. So I'd give you one round before others. So tell us, we spoke about challenges, we spoke about opportunities. So it's actually the two sides of the same coin. So let's not get into the same, loop. But tell us, from your agency, what you can do to seize those opportunities. What these gentlemen, the bank, the SFB, MFI, NBFC, and pure play MFI, what can they expect from you? How you can help them?
Excellent question, Tamal. So
Please.
I think
I saw you launching a product with GG.
That's
So
right.
tell us, take these 3 minutes and tell us what can be expected from your agency, which will be helpful for all the players there, irrespective of their skin. Because RBI has shifted from entity-based regulation to activity-based. So in this MFI segment, because as one of you said that new RBI norm, that assessment of household income, it's a bit tough. So keeping all this background and the new RBI norm, what can the industry expect from you?
Absolutely, I think our contribution to the industry can be phenomenal because the level of data that we have, the level of insight that we can provide. So I'll break this into 2 or 3 different parts. From our enabling role that we play as a credit bureau in the country to help growth in credit, help healthy growth in credit. That's the tagline. Now, the first one is, I think we talked about some of the concentration risks, and just, the question was, are we concentrated more in certain states? Are we less concentrated? So we bring in insights on a consistent basis to see, are there any concentration risks? Where are the opportunities? Where are the risks in the marketplace? Down to a pin code level. So the next stage of that is, we are also breaking the data down to a village level. So you could really set your, credit rules, credit approval process so focused, so minute to ensure that, you're reflecting the characteristic of the particular village in the decisioning. So currently it is down to a pin code. In the next couple of months, we will have down to a village level in terms of our data segmentation. So that's how granular we are getting to help enable industry make the right decision at the time of approving a loan for an existing borrower or a new borrower. So that's one angle of it. The second angle of the insights is also to see which market to enter, which market to exist. I think Manoj talked about being restrictive on certain markets. So all those decisions can be enabled through data because we can clearly bring out the number of players in the market, which loan cycle all the customers are in. They are in L1, L2, L3, L4, L5. I don't have much time, but I would have given you a very nice story about the loan cycle behavior. We did a loan cycle behavior from L1 to L6. L1, the performance is very good. L2 goes down, L3 goes down, L4 improves, L5 improves, L6 is the best. So when you start with L1, and it's a typical classic bell curve when you do a loan cycle-wise evaluation of the performance of the customer. So data can present many different views. I think, how well the data gets used by all of you as a practitioners, I think makes a phenomenal difference. So that's broadly at a very strategic level as to what we can bring about. From an operating level, what we're looking at is, how do we enable all the practitioners comply with the regulatory framework more seamlessly? One of the examples could be that we're working on at this point in time, when a loan officer is in a meeting at a village level or at center level, can he access the previous reported household income of that individual? So could that be a reference point? All of them are digitized now. Everybody carries a tab to a center meeting. Can he access the last reported household income of that individual and then ask the right questions thereafter to validate the household income? So there's a lot more that can happen. We are also working with the regulator to see if we can get, let me step back here, right? One of the requirements for compliance is also the EMI obligation of the household, right? Now, microfinance as an industry, I must salute the industry. Their submission of data is really, really good. All of the practitioners submit the EMI data very, very regularly. So we're able to derive the EMI obligation from a microfinance standpoint extremely well. But when it comes to retail, the EMI is not being submitted. It's not mandatory field at this point in time. As part of the TWG group, we have recommended that the EMI data for retail lenders also should be made mandatory so that we could get a household obligation very, very clearly. So it's about the data, way it gets submitted, and our ability to bring in a lot more comprehensive solutions around this. And the last segment is the credit risk and the fraud risk. I talked about the Luminate that we have launched. It is potentially to see, are there any potential fraud risks that are seen in the lending landscape? So we would be able to get down to locality, geography, all of that stuff very, very clearly from a potential fraud risk. As I said, business is fairly simple as long as you can protect yourself from credit risk and fraud risk, and everything else is to grow the business in the lending landscape. So a lot of innovations. We have a data center lab based in Bangalore. We continuously innovate. One more or two more, possibly innovations that I'll talk about is, one is on the credit risk side. Is there a way to bring out a much more powerful combined risk score, which is a risk exposure on the microfinance and risk exposure on the retail? We've already launched that combined risk score. That is something that is already out there in the market. Also the collection risk, can you predict potentially defaults on collection, collection defaults in next 60 days? So we're using data to be able to help predict some of this risk very, very effectively. And I said, we're truly humbled to be part of this industry and truly humbled to be playing an enabling role for a very healthy growth of the industry.
Thanks, Nanaiah. Very reassuring. So he has the Equifax has told you that you can bank on him. He will support you to the extent possible. Thanks, Nanaiah. I think he needs to leave. Give him a big hand. He has to catch a flight. So we'll come back. We have about 13 minutes left, 2 minutes each probably. But before that, just one small thing. Manoj spoke about green light and amber and red. That's how the traffic light operates, and that's how we do it all. But just... Yeah. Just one Nanaiah's memento quickly, sir. No, it's okay, fine, absolutely, that's a part of the game, so. And after so much of assurance, I mean, they have to treat you with garland and all, so. Okay, thank you. So what I was telling, that Manoj said that they go by red light and then amber and green follow. But who actually respects the traffic? The person, despite being green light but does not go. If the pedestrian is going, stop your car. That's the best way to respect pedestrian. That's the best way to drive. So don't only go by red light, so you'll stop. Even when green light, you need to stop at times. I mean, it's a very crude simile. On the road, if a baby is crawling, if a small kid are going, or an old person is going, or a dog or cat, even though there is red light, you have to stop there. I think at some times, particularly microfinance industry, it happens is this. You don't stop. I mean, you don't stop even, forget stopping in green light, you don't stop even at red light. That was the problem, sir. So don't go by only the textbook. Use the other part also, other part of the brain, where to stop. Risk-taking is good, but too much of risk-taking, because banking is a boring business. There is no place of adventure there. 2 minutes each, sir. Madam will keep you at till the end. So, yeah, nodding, I think Arohan will start with. We'll start with, yeah. Just we have discussed challenges, we have discussed opportunities. Now just 1.5 minutes each or 2 minutes. What are you going to do? That's it. Individual level, how do you treat this particular piece of cake, East and Northeast?
Yeah. No, I think
each of you the same answer. We'll ask you as an observer, and you know the industry, and each of you are in some skin in the game in some form or other. This round will end with Madam, because you started. What is your game plan? What is your roadmap 90 seconds each.
No, like I mentioned in my earlier submission, for us, Northeast, East is really our home. We are based out of Calcutta. We've been operating for about 15 years. We've been in Assam since 2008, including some other states in the Northeast. So all the numbers that I mentioned earlier, I'm not going to repeat them again, but essentially we see a good opportunity because of the younger population, because of the under-penetration on financial inclusion in that geography. More than 30% of India's registered MSMEs come from that part of the country. And I mean, like Madam said, a lot of the businesses, whether it is agri-based, tourism, entertainment, a lot of the potential essentially comes from there. And the fact that today you have political alignment between the center and the state ensures that there is a lot of focus on the Northeast, which was not there earlier. Now, we have been there, we are there, and we will continue to be there. But again, I'd like to highlight the fact that most of the problems that we discussed, whether it was of the over-penetration in terms of a particular state or indiscipline in terms of lenders or customers, all the solutions to all of that are in this room. The solutions to all of them are between the 50, 60 active lenders who are there. If we are disciplined, if we follow the code of conduct in letter and spirit and subject ourselves to scrutiny every quarter, I do not think that there would be any problem like what happened in Assam. Having said that, I would say that the RBI regulations are very, very positive. It helps us reach the hinterland where the operating expenses would be higher to ensure access to finance. The code of conduct, the NatCat insurance that we are looking at, which will help us manage in case situation where to go, ORI, all of that put together, I see a situation where the 26-27% of Indian population which today doesn't have access to finance like the way North, West, and South do, including Central, right? And I would say that is the opportunity that one should work towards, while not forgetting some fundamental ground rules, and of course the local nuances which you cannot afford to ignore.
Thanks, Manoj. So
I would also like to sort of, Tamal, add a line here by saying that as of today, we've launched India's first credit risk-based pricing, which essentially means, like Nanaiah said, if there is a credit score attached to every application which is processed, and depending on our previous history on that particular profile, the credit risk premium would be attached.
So the different.
So you could have a customer who actually gets a microfinance loan at 23%, which is the lowest, or somebody who's charged 25 or 26, depending on the risk perception and the previous performance of that particular.
Differential interest rates. Yeah, that's the way to go. That's how it's evolving. Yeah, let's hear Siddharth.
We are just trying to keep things very simple going ahead, and not necessarily the strategy for East and Northeast is something significantly different for us. On the microfinance business side, we are focusing on two things. We think the big differentiation we will bring in compared to our past business or more scientific approach we will be bringing in terms of having better selection of borrowers and trying to develop even stronger early warning signals. And there, the entire focus is on research, analytics, etc. We are investing very significantly. We always recognize that field force is our very, very strong area. Rigorous training is very strong area for us, and we are very keen that we want to bring in this third element of strong ammunition in the hands of our field force and in terms of the first round of soldiers through this rigorous data analytics approach, and we are investing very significantly in this particular area. We are actually seeing some interesting results already. For example, I'll just take possibly 30 more seconds to highlight, even during the period of COVID, in the lower end of the pyramid, there is an element of declared income, but when we are actually doing statistical modeling, we are hugely and pleasantly surprised to find what kind of underreporting of declared income is still there, and which is actually offering new business opportunities in a much more scientific fashion. Not necessarily it's across the board, but in many pockets we are getting that, and we are actually trying to capture on those areas.
Thanks. Venkatesh, quick 1 minute, because 4:15 will end. Yeah.
Yeah, I mean, in terms of the business, we have spread it across all our states. I mean, if you look at, we do see a good opportunity in the east and northeast. depending on the population, the demographics, we will definitely grow our businesses, but we'll, in terms of the spread, I mean, per state, we'll definitely, we have already restricted to 20%. We don't grow more than 20% in any of the states. So that's a thing which we are following. But if you look at the states of Bihar and West Bengal and Odisha have done well for us. So we see a lot of growth opportunities in these places, and we are looking at new product lines also in these places, and we're definitely looking at it in a very positive note for East and Northeast.
Thanks. Very positive. Takkar sir, what's your advice? Madam, you are the last. You have the last word. Yeah. 1 minute, sir. What's your advice?
I think what we have discussed today, the data, what other my colleagues have spoken, a lot of opportunities there. Both the eastern, northeast, they are the not only opportunity, they are the regions which require that penetration, require that MFIs to be there. So, but obviously, a few challenges are there, no doubt. I think the NPAs, the delinquencies, but I think that can be overcome through effective selection of borrowers and a proper recovery mechanism. So I'm sure my colleagues from the MFI industry are already focusing on that area and will continue to do so. And even from the bank side, and I've also been associated with a few, I'm actually a director in NBFCs. So there also we deal with the MFIs, and we observe that most of the MFIs are doing well, and especially they are focusing on the northeastern sector. They also realize the tremendous opportunity out there.
Thanks, Takkar sir. Rupali madam, last word is yours. Just 1 minute, sharp.
Yes, sir.
What's your plan?
Yeah. So, plan means like it is our home, we have to grow there only. So what we feel is that we should actually learn from the crisis that this sector has gone through, especially in Assam and the entire Northeast, and we should try to sort of bank upon the opportunities, starting from the very small like microfinance to the mid-level segment of loan, where all the stakeholders put together, we feel that should work together to build up an environment of credit delivery and credit discipline, where the SROs should play an important role. And once all the stakeholders work together, keeping aside the personal ambitions of growth, I think we can do a lot of service to the sector and to the states.
Thanks, Rupali madam. You have very succinctly you have summed up. Rahul, I think on fairness, we should give you, allow you to have one or couple of sentences, because you started with the presentation, you heard them.
Yeah.
So just close it very quickly, 30 seconds.
Yeah, so I think we had a wonderful discussion. I just very quickly would like to draw attention to the role of some of the small MFIs that are there. And they're not just small, they are very, very small. I've seen MFIs with portfolio of 5 crores, 10 crores, 15 crores. And it is unbelievable how they have survived the COVID crisis despite the kind of portfolio I just talked about. They are there while we are talking about accessibility. These smaller MFIs are there right in the hinterlands, managing with very limited resources. And the role of NEDFI cannot be overemphasized in supporting these. So I think these MFIs and NEDFI also provide certain green shoots and the opportunities that we talked about. So I thought I'll just draw attention towards these MFIs.
Thanks,
Thank
Rahul.
you,
It's 4:15, 35 second exceeding, so I'll take just 30 seconds. We could have gone on and on because it's very interesting subject, but there are opportunities, there are challenges, but the most important part is this. I think hand on heart, everybody here, those are the active players, they know that what has gone wrong. So that's the biggest strength. If we know what is our weakness, that's our biggest strength. So I think the industry has learned its lessons, and now from now on we'll see. I mean, they've recognized that there were certain things that happened, should not have happened. So now everybody is determined that, believe in, I think, peaceful cooperation and coexistence. That's the way forward, because at the end of the day, it's not I or we what we do, but it's the people that says the 26% of India's population, and somebody spoke about how it's its contribution to GDP, how credit starved they are. So I think it's pretty clear from everybody here, present there. So they have learned what has happened in the, let's not blame on COVID, let's not blame on politics, let's not blame on flood. The problem was somewhere else, and that we are not getting into it, but that everybody understood what was the problem, and everybody is ready to rectify the mistakes, and everybody is ready to move forward. There's unity, and I think here, Gigi, your organization, Sa-Dhan, needs to play a very critical role to move ahead. There are huge opportunities, and we need to seize that opportunity in a fair way. Fair to the customers and fair to the industry. With that, we have just exceeded by 2 minutes, I think, my apology. And if you have liked whatever they spoke, very, I think very clinical, very candid, soul-searching, and nothing. Everybody was so honest and so candid. It's very impressive. So give them a very big hand, please. Thank you. Thank you all.
Well, thank you once again, Mr. Bandyopadhya, for excellent time management here and your moderation. And I'm sure, like you said, everyone enjoyed this interaction. And with that, we close this session. But we'd like to, of course, extend our heartiest gratitude to all of you. Mr. Bandyopadhya, if I may ask you to please present the mementos on behalf of Sa-Dhan to each one of our panelists for this session. And I'd like you to start with, first of all, yes, of course, presented to each one of our speakers here, Mr. Takkar, Mr. Kalengada, Ms. Kalita, Mr. Nambiar, Mr. Venkatesh N, Mr. Siddharth Sanyal, and Mr. Rahul Bisht.
Thank you, sir.
And I'll once again request Mr. Gigi Mammon to present a memento on behalf of Sa-Dhan to Mr. Tamal Bandyopadhya and thank him. Requesting everyone to please come forward for a group photograph. And ladies and gentlemen, with that, it's time for another very short presentation from Sun King before we begin the last and final valedictory session. So I'll quickly request Mr. Sahil Khanna, GM Asia and Latin America with Sun King, to join us on stage to make this brief presentation on achieving SDG goals with Sun King. And I request you to please welcome him with a round of applause.
Good evening, everyone. and thank you for all of you guys for staying here. I thought we'll close the day by talking about some climate stuff. It's an important time in world history because we've increased climate threshold at max in a lot of ways. We are at a turning point in the world history wherein climate thresholds have increased, and we all owe it to the world to give it back and also do our own job in terms of impacting the climate in the world. We are doing the Sa-Dhan conference today, but there's also COP27 happening in Egypt. World leaders have gathered around to actually discuss how we can do our own jobs in terms of giving it back to the world. And I think all of us, as even leaders in the financial industry, owe it to the world, to the earth, to give it back. So with that, I would just like to take 5 minutes to talk about Sun King. Sun King is the world's largest off-grid solar organization. We are designing, distributing, and financing solar home solutions in more than 40 countries. So far, we have impacted more than 90 million lives with solar energy. We've been able to do this with the help of 2,000 odd full-time employees in about 40 odd countries, and also 15,000 agents who are working in the field, going door to door to impanel solar energy across the world. An important thing to note is that the financial industry here plays a very, very important job in imparting solar energy to the clients across the world. In India currently, we work with more than 40 financial institutions. Let me talk about our market share globally. We are currently the global leaders in imparting solar off-grid products. Globally, we have about 37% market share. And in Asia, we have about 44% market share when it comes to the industry. In pay-as-you-go distribution, we have about 57% market share globally. I want to also talk about some of our equity investors, and talking about investors is because we need a scale in distribution to actually reach the end clients. Right now, we've impacted about 90 million lives, but the need is actually for about 700 to 800 million more people who actually still require access to energy. If we are actually playing our roles, we can actually fill this energy deficiency with the help of solar energy. Some of our equity partners include Apis Partners, Bamboo Capital Partners, Stan Bank, Symbiotics, and Citi. With the help of our most recent fundraise from General Atlantic and M&G, we were able to do one of the largest fundraising rounds in the industry, which was at about $260 million. This fundraise will enable us to reach as many customers as possible in the fastest possible ways. Our operations in Asia include India, Pakistan, Myanmar, Philippines, Malaysia, Indonesia, Papua New Guinea, Vanuatu, as well as Fiji. One very, very important thing I wanted to highlight to the financial industry here is that our work is very, very critical to the work that MFIs are actually doing in the country. We currently operate with about 40 odd financial institutions in the country, which includes lights of the biggest MFIs in the country. With all the financial leaders sitting here, I would request all of you guys to look at this industry seriously and also play our roles in distributing and financing solar energy to their clients. Apart from partnering with MFIs, we also have a vast retail distribution network with about 30,000 retailers who are spread across the country and about 400 odd distribution partners. These are some of the solar home systems and solar lanterns that we've been working with MFIs. They include portable lanterns, which can also charge mobile phones and can also give lighting by charging directly from solar energy, and also solar home systems which can light the entire house. Now, with the increased electrification in India, we also saw this as an opportunity to include on-grid products in our portfolio, and as a result of that, we have launched the new Sun King Infinity range, which is also now working with the on-grid sector as well as electrifying the houses without solar energy directly on AC lighting. With the industry like ours, there are many opportunities apart from solar energy. We are strongly looking at e-mobility, we're looking at refrigeration, we're looking at how to make education more accessible, how to make e-bikes more accessible in rural areas, and concentrate on washing, hygiene, and economic opportunities such as cash loans. I just want to end by saying that this is an important event for all of us in the world to look at. This is an important industry for all of us to work together and play a huge role in contributing to the sustainable development goals of the world. So my request to you would be to find opportunities in your own ways to contribute to SDGs and make an impact that you can at your own level. So thank you so much, everyone. See you guys around. Thank you.
Well, thank you once again to Sun King for that presentation. And it's time for us to now begin the valedictory session. Ladies and gentlemen, may I request you to please put your hands together and join me in welcoming our very special guest for this last and final session, which is the valedictory. We have Mr. V. Satya Venkata Rao, Deputy Managing Director with SIDBI. Let's all welcome him with a round of applause. As I invite him on stage now, I'll also request Mr. Gigi Mammon, ED and CEO, Sa-Dhan, to please join us once again on the stage, and request everyone to please remain seated. This is the last and final session. I'll also request Mr. Divakar Hegre, MD, NAPFINS and board member of Sa-Dhan, to also join us for this session, please. So I'll first of all request Mr. Gigi Mammon to welcome Mr. V. Satya Rao with a plant on behalf of Sa-Dhan and thank him for joining us here today. And also welcome Dr. Hegre to this session. And without wasting any time, I'll request Mr. Gigi Mammon to say a few words. Just welcome our two guests here to this valedictory session.
Good evening, friends. We'll be concluding this session very shortly, so please be there for patiently for some more time. First of all, let me welcome Rao Saab, DMD SIDBI, who has been kind enough to be here and is our major sponsor. SIDBI is our major sponsor, and he's been always there. SIDBI has been always there with the sector as well as Sa-Dhan in any of the events, as well as all our programs. So I thank SIDBI for that, and I welcome Rao Saab to this validity section. In fact, DMD Shaji from NABARD was to be here because of some meeting in the government. He is not there, but he's been represented by the senior officer from NABARD, CGM, Dr. Divakar Hegde. He is also MD of NAPFINS, one of the microfinance institution of NABARD, sponsored by NABARD. So I welcome him also to this validity session. I welcome all of you for this validity section, and we'll be having a quick presentation by M2I and then the validity address by DMD, and thereafter we'll conclude. Thank you.
Thank you, and as mentioned, I'll now request Mr. Atul, co-founder M2I, to please make a presentation, give us a snapshot of the study on impact of Indian microfinance sector.
Thank you and good afternoon, everybody. I'm privileged to be making this extremely interesting presentation on the impact of microfinance. I think I need some help. This interesting study was commissioned by Sa-Dhan, and it was guided by an independent advisory committee. Of course, M2I conducted it. Yeah. So the context was, the study has been undertaken to develop an understanding regarding the nature of impact of microfinance operations on the lives of clients of MFIs as they progress through loan cycle, and assess the nature of impact and identify opportunities to improve impact. So as I said, this was an independent research study and it was guided by an advisory committee. We had a large sample of over 1,000 respondents who were all clients of MFIs. The scope was national. We divided India into 5 regions and apportioned the sample by the, the clientele, the outreach of MFIs. And we attempted to get respondents across various loan cycles. We took help from MFIs for the sampling. The help was in enabling our enumerators to reach the clients, but not while interviewing the clients. So the interviews were conducted independently, and we used typical research tools like questionnaires and focus group discussions. The breakup was almost equally divided into urban, rural, and semi-urban. And as you can see in the histogram, that was the age profile of the respondents. Now, the advisory committee, I'd like to acknowledge here Sri Brij Mohan. We all know him in the microfinance sector. Professor S. Mahendra Dev of IGIDR, Madam Jayasri Vyas, Professor Tara Nair of GIDR, Mr. Murli Srinivas, CEO Smile Microfinance Limited, and Gigi Memon sir here, as well as late Dr. P. Satish, who provided us a lot of guidance during the conceptualization of this study. So there is clear evidence of favorable impact on income. Monthly savings in the households of my clients of microfinance, before joining, we asked them that before you associated with the MFI, did you save? Did you manage to save anything? So 54% would say yes, but after, nearly 80% say that they are able to save something in the household. Similarly, greater than 30 days joblessness for the main earners. So before associating with MFIs, it was 61%, after it has reduced to 50%. Sources of income. So before associating with MFIs, roughly 54% of the respondents have said that they had only one source of income, whereas it has come down to 25%. If you ask them, almost everybody says that their economic profile, their income levels, their asset holding has improved. So the proportion of clients who now live in Pakka houses has improved. Those who have access to piped water supply has improved. Those who have access to toilet facility in home has improved after they associated with MFIs. Similarly, there has been an improvement in ownership of feature phones, smartphones, television, fridge, gas connection, two-wheelers. So it could be due to so many other things, but the fact remains that a significantly higher proportion of clients of MFIs say that they own these things post their association with MFIs as against before they associated with MFIs. And these are the reasons they attribute for the improvement. So more earning members in the family, more work in business, access to loan funds from MFIs, nearly 32% have said that timely access to loans has enabled them to improve their income and economic profile. Lower cost of credit, 20%, and some of the other dimensions that have emerged you can see on the screen. Now, on the softer sides, on the softer aspects of impact, nearly everybody say that every respondent has stated that her confidence while talking to unknown people has improved. 44% say that it has improved highly. Same in terms of their status in society, their own perceived status in society, 45% say that it has improved highly. Another 54% say it has improved somewhat. And role in household decision making, 85% say that it has improved significantly, 15% say that it has not improved much, but these 15% are a lot of them are in the Northeast, so they already appear to have, a better profile as far as this factor is concerned. Now awareness, on the awareness dimensions also there has been an improvement. So 81% are aware of PMAY, 79% for midday meal scheme, 40% on about NPS, and 52% on old age pension scheme. And over 66% of the respondents say that government schemes are discussed in their center group meetings. Maybe this has to do something with COVID, when there was a lot of effort by MFIs to raise awareness about clients, but on other dimensions also, at least 17-18% respondents say that these things are discussed very regularly. 84% have reported at least some improvement in their ability to count, read and write, because they transact, they have to count money, and that by design leads to an improvement. And then there has also been a reduction in their dependence on informal sources. So with time, more banks, more providers of financial services have become accessible. So maybe that is also a reason, but there has been a reduction in terms, as far as dependence on informal sources of credit is concerned. So, this study also gave us some insights regarding how one can improve the impact. We need to have loans to, the microfinance sector needs to provide loans to promote micro enterprises. Right now, the loan sizes are not so high that they can actually support micro enterprises. Maybe enterprise development trainings could also be, as part of your CSR activity, as part of CSR activities of large MFIs, enterprise development trainings could help clients access more economic opportunities, improve their income levels. Then careful loan appraisal remains a necessity, because every respondent that we interacted with, even those who had very little household savings, also said that they needed loans. So we cannot just give loans unless we have assured ourselves that they have the capacity to repay. We need to innovate to serve the really poor. The really poor are those who even the MFIs do not lend to. So can we think of designing products which can address their needs? So the study has some discussion on that. Emergency loan product is of need in the sector. Right now, I think very few respondents in our study have said that they were able to access MFI loans during times of emergency. So that, it seems, has emerged as a need. Similarly, housing. So microfinance clients aspire for better housing, and this is a very, very significant need. Nearly 85% of the sample says that they'd like to improve their homes. Insurance, the subscription to insurance was very low. Apart from compulsory insurance, credit insurance, voluntary insurance, health insurance, subscription is very low among MFI clients. So maybe facilitating, making them aware, facilitation could help. The awareness regarding pension and subscription to pension products, even NPS, is less than 5% among MFI clients. So that is another area where MFIs could think of intervening and impacting. Now, in our sample, only 66% of the respondents have stated that they trust the MFI staff. So there was discussion within, while we were reviewing the study, and we felt that this percentage needs to be much, much higher. So how do we improve their trust? Moreover, with increasing use of technology and digital payment, trust will be something which we'll need to build. And finally, code of conduct, do no harm. We did find a few respondents who stated that they had unpleasant experience with the MFI staff. So, my company M2I pioneered the code of conduct assessment way back in 2010. And I think there is still need to ensure that the code of conduct is followed, and we are careful about how we interact and deal with clients. So those were the major recommendations that have emerged from the study. Thank you so much, sir, for giving me the opportunity to present it here, and thank you, everybody.
Thank you, Mr. Atul. And with that, it's time for us to now release the study on impact of Indian microfinance sector. I'll request the team to please bring the copies so they can be formally released by our special guest, Mr. Rao, Mr. Mammon, and Dr. Hegde here on the stage. Ladies and gentlemen, the release of the study on impact of Indian microfinance sector. And without any ado, for a very special address, I now request Mr. V. Satya Venkat Rao, Deputy Managing Director, SIDBI, to please join us and address the gathering here. Let's welcome him with a round of applause.
Good evening to everyone. I feel that for the last 2 days, you must have had very intense round of deliberations with regard to the microfinance operations in the country. The kind of subjects and deliberations that I have seen from the profile and the profile of the speakers definitely would have enriched all of you when you go back and see what has been the takeaways for the last 2 days. In fact, I need not tell you that as far as SIDBI is concerned, we are associated and we have been fortunate to connect with most of the microfinance institutions for the last many years, and we have been through various stages and all the learnings. Of course, people have spoken about the problems in Andhra Pradesh, then Assam, everything we have seen, and we have learned a lot as far as the industry evolution is concerned. Now, going forward, what are we to look for from this segment? In fact, one of the key things that all of you are concerned is the financial inclusion. And financial inclusion goals can be better achieved only with the active involvement of the microfinance institutions. Because these are the institutions which cater to the most underserved and underserved segments of the society. We have seen how much of over-dependence on the informal sector, the pains of the beneficiaries that they are subjected to in terms of crisis, etc., are all well documented. We need not spend too much of time on that. But from now onwards, with the advent of technology and the use of technology insofar as the appraisal part is concerned, in terms of delivery of credit, in terms of monitoring, in terms of risk mitigation, everyone is making use of the technology so that the credit dispensation has moved in a faster manner. Now, there are also concerns with regard to the microfinance segment. Those concerns have been addressed to a large extent by RBI, and regulations have been put in place. We have the code of conduct, we have got the grievance redressal mechanism, all sorts of problems are being attended to and are being disposed of in the manner they are intended. I will just take 2 minutes of time as far as SIDBI's connect with microfinance institutions for the coming years. In fact, you are all aware about the Prayas scheme. We have done Prayas and we have partnered with a few of the institutions, and we would like to increase that number in a substantial way. What we would request through this forum is to send a message that this particular scheme is a digital one, and through the digital platform, the beneficiaries, with the help of the partnering institutions, can avail the small segment loans. In fact, we at our end are also expediting the sanction process of the loans to the partner institutions so that they in turn can lend it at a faster speed. The other thing which I'm glad to announce is the revival of IMEF. In fact, you are aware that this is a particular fund which is to be used for equity and equity-enabled kind of products like preference shares, etc., towards the microfinance segment. Substantial amount out of this corpus has been utilized for the last many years. Whatever unutilized funds are there, those are going to be employed by SIDBI in the coming years with the focus on the tiniest of the microfinance institutions. So wherever the institutions are in their early stages and they are moving into the growth stages, they are most welcome to approach SIDBI for availing the support from IMEF. The other thing which SIDBI is considering and also is actively working with the microfinance institutions is to deliver credit to the lower rated NBFCs and MFIs. In fact, we have come out with the AIF schemes known as pool loan assistance and partial loan assistance, etc. These schemes are intended to see that the loans are given to lower rated entities. We are encouraging the industry to come and take support, and for this, of course, all of you know that SIDBI has got a specialized vertical dealing with the sanctions to this particular segment. I would request all of you to make use of the funds that are available under this segment so that the needs of the poorest of the poor can be met when the loans are availed by the underrated and unrated MFIs in the country. With these words, I would again urge upon all of you to be in touch with SIDBI and take whatever mileage that is derived, that can be derived from the operations of SIDBI. We are also open to the feedback that may have to be given to SIDBI. We are available throughout the country, and of course, I have heard a lot about the geographical part, the northeastern part, the eastern part, all that. In fact, we need to work in those territories much more closely so that the benefits of the microfinance can reach to the poorest of the poor. With these, I conclude my address. Thanks a lot. Thanks to all.
Well, thank you very much, Mr. Rao, for that very special address, and we once again thank you for joining us today. I'll request Mr. G.G. Mammon to present a memento to Mr. Rao and thank him on behalf of all of us here at Sa-Dhan. And with that, we've almost come to a close of the valedictory now. I'll request Mr. G.G. Mammon to give a vote of thanks. And also before that, we'd like to felicitate, thank all of our sponsors and partners. So I'll very quickly invite all of our partners. I'd like to begin with our principal sponsors, and before that, our conference partners, NABARD and SIDBI. So the team from NABARD and SIDBI, can we have a representative each at least? And if we have the entire team, we can have someone come on the stage, and I'll request Mr. Mammon to please felicitate. We'd like to make a mention here that without all of our sponsors and partners, it really wouldn't have been possible to pull off these 2 days of program. So we thank you at every step for supporting us and for all your contribution. So NABARD first, and I'll also request SIDBI. For SIDBI, can we have the team from SIDBI? Please put your hands together, everyone. And in the interest of time, I'll also very quickly call upon our principal sponsors, IDFC First Bank and Muthoot Microfinance, to please be on their way to the stage just to save time here. Thanking SIDBI for being our conference partners. Can we have someone from IDFC First Bank, our principal sponsors? We'd like to thank the team, IDFC First Bank. From Muthoot Microfinance, next. Muthoot Microfinance, also our principal sponsors. Next will be our co-sponsors. First of all, Sa-Dhan. Somebody from Sa-Dhan, HSBC, Unity, Small Finance Bank. Can we have you all come up on stage, please? Sa-Dhan, HSBC, Unity, Small Finance Bank, Satya, M-Swast, and Sun King. The teams who are our co-sponsors. Sa-Dhan. Can we have someone from HSBC, please? From HSBC? No one from HSBC? No one from HSBC. Okay, Unity, from Unity Small Finance Bank. Anybody from Unity Small Finance Bank? From Satya? Do we have anybody from Satya here? Okay, Unity's got it. HSBC, Sa-Dhan, Satya, M-Swast. From M-Swast. Thank you. Can we have the team from Sun King, please? From Sun King, yes. Then of course our associate sponsors, Legality. Do we have Legality? Somebody from Legality, please? Yes, can we all have a round of applause? Legality. Also our associate sponsors, Jana Small Finance Bank. Jana Small Finance Bank, Samsung, Kaleidofin, SBM Bank. Can we request you to please join us on stage? Jana Small Finance Bank. Anybody from Jana Small Finance Bank? Thereafter, Samsung. Can we have the team from Samsung after that? After that, Kaleidofin. Samsung. The team from Kaleidofin, please, after this. Do we have anybody from Kaleidofin? Okay. From SBM Bank? Okay. 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 ISAF Small Finance Bank? From Bivel? From Avazde? Bandhan Bank, do we have anybody from Bandhan Bank here? Our associate sponsors, Bandhan Bank. Then we also have Opportunity Edu Finance. Opportunity Edu Finance. Finheart. Anybody from Finheart here? Craft Silicon, Water.org, Water.org, from Craft Silicon, from Vivritti Capital, and TRST Score. SBM, TRST Score, Vivritti Capital, Craft Silicon. Avaz.day, Bivel, nobody from Bivel. Okay, finally our knowledge partners, M2I. From M2I, we once again have Mr. Atul from M2I. Our technical partners, Grameen Foundation. Somebody from Grameen Foundation, please. And finally, our online reputation partner, Eminence. So thank you, everyone. Thank you, all of our partners and supporters, our sponsors. Final word from Mr. Gigi Mammon. Yeah.
Well, friends, good evening once again, and we are at the end of this program, end of the two-day event. I thank each one of you for being here, for spending 2 days with us. And I'm really thankful to all the participants here because you had been quite patient. You had been with us for the last 2 days. Almost the entire day you were here. Till around 3:33 I was seeing it, so almost the hall was full. That is really great. and it's an overwhelming response we had from all different participants, and it's really a great encouragement for all of our entire team. So thank you so much for that. I especially thank our dignitary speakers, especially the speakers who had been here. They made the days really memorable because of their inputs, and because we had so many sessions happening across in different halls. I was feeling that maybe I was doing a little bit just injustice, because some of the people were telling that they wanted to attend both the sessions or all the 3 sessions, but they were unable to do it because of the breakaway sessions were happening in different places. But then unfortunately we couldn't help it, because since we had to keep it in a 2-day event and we had to accommodate several topics, so we had to do it in this way. Maybe next time we will be a little more careful. We will be seeing how best we can accommodate more people to attend different programs. See, we started the day yesterday with the launching of a new phase for Sa-Dhan, which all of you know that now we have become more inclusive in nature, in the sense, apart from the microcredit only, or the developmental finance only, we are now moved into an area where we are encompassing all kind of developmental initiatives, whether it is SDG related or climate change related or ESG related, all kind of developmental initiatives, or anything which is impacting the lives of the poor people, it will be part of the Sa-Dhan fold. So we have become more inclusive, and that's why now it will be, we are gone from financial inclusion to the inclusive growth as our motto. So probably the next year, this conference itself will be renamed as National Conference for Inclusive Growth, rather than the National Conference for Financial Inclusion. So that is how we are moving forward. In this regard, we had entered into a few associations, few MOUs, few agreements. One yesterday you must have seen with HSBC, we have entered into an agreement for enhancing digital financial inclusion. We have an association with TRST Score for improving the manpower index, in the sense giving a credit score kind of a thing, scoring to the manpower, which are resources for our MFI especially. So it will be easy for someone to hire a person by seeing the score. We have an association with NestGen FinTech, where a SIM only is used for making a feature phone, making as good as kind of a smartphone. Then we have an association with Kalita where we have seen that a new product has been launched, Cash, how it is going to be useful to the people. And also we have an association with Meadow Plus for the health-related initiative. So I'm sure all our MFI friends would be able to have association with these people and ensure the best is given to our clientele at the field level. We are also working with Craft Silicon because we know that, in fact, our DMD also touched upon that. The technological capabilities of some of the MFIs may not be as good as the bigger ones. So how to improve that? We are also working with Craft Silicon to see whether we can have some kind of an arrangement to extend the best solution to all the MFIs who are interested, especially the smaller ones, who may not have that capabilities, who may not have the financial strength to get a kind of a solution like that. But then we are trying to have some arrangement to see that how best we can have a much cost-effective way of acquiring that kind of a capability. So these are some of the things we are looking at. And going forward, we will be looking for more support from all of you. We are really encouraged by the response we got for the last 2 days, and I look forward for your support in the future days also. And I especially thank all our sponsors, especially the conference sponsor, SIDBI and NABARD, our associate, our principal sponsors like IDFC Bank and Muthoot Microfin, and all our other enlisted the sponsors on the board. I thank them from my bottom of my heart and hope that their continued support will be there for us for our future events also. With this I conclude. I thank each one of you, especially I thank Rao Saab for being here for the valedictory session. I thank NABARD, I thank Diwakar Hegde and other entire NABARD team for being here. So thank you so much. Have a safe journey back and have a great days ahead. Thank you so much. Thank you. Of course, one last word, of course, I missed out. And my entire team, of course, my team has been so great. In fact, that entire team, we have around 13, 14 people, no, 17 people. All 17 are doing excellent job. Especially, I'll be calling them. My team, please come onto the stage. Entire team. Chandan did an excellent work, which all of you knows. Then similarly, each one of them did an excellent job. And that is how the whole show has made a good success. Thank you so much. Come, please come. Actually, the credit goes to this